Hey guys, welcome back. This is Will Beach with After Hours Market Talk. Today is June 21st, 2022. And here we talk about what the market did today, what we think it'll do tomorrow, as well as I will help teach you how to read charts. We got chart analysis. I'll show you different indicators, some different patterns. We mainly talk about the futures markets, the Forex markets, and let's grow this community and be awesome together. What I would like to show you today is basically so far what we have done through the market hours. If you guys watched yesterday's episode, you will see I have drawn out this gray box. This is the NASDAQ that we are looking at now. This is the gray box that I drew out yesterday as a place for to see the NASDAQ retest. ES, they're all very similar. I didn't draw the boxes, but you see it's basically the same spot on the ES and the Dow. Same spot kind of coming down on this 50. I just drew the box on the NASDAQ. I follow the NASDAQ more closely. And with that, this is where we're at now. So we're at this retest level. It basically did that all day long. So if you took longs today, you were in a good place because we went up about 300 points. If you were at the market open, as in like now 6 p.m. or later, then you could have pretty much ridden that all day long. We're just now getting a little bit of pullback and we are resting on top of this 50. So this is kind of one of those critical points. We're going to see what happens if we're going to hold this support or if we're going to consolidate, because technically this is consolidation. When you have a big move down, up, bottom Bollinger, top Bollinger, you see we basically have these blue lines drawn out. That's a consolidation channel at this point. That's basically sideways. And now we're looking for, where is this thing going to break out next? Is this going to go up and stay above these areas, or is it going to drop down and go below these areas? How we determine that move is simply when our ADX comes down and kind of does a reset and curls over and starts gaining momentum. Which side of the coin are we on? Are we up here or are we down here? And as of right now, this is one of those days, right? You could have had a nice, long, solid green day. Some days you got to sit out and watch, okay? All my long-term investors, we are not out of the woods with the actual, trend. We are still down. We have not fully corrected. Like I said, we're in consolidation on the 4-hour chart and barely in on the daily chart. We've only kind of just begun with this down, up. And right now the trend is still technically down. So we would need to see this thing ramp up to this 20 and break it, get to that 50, pull back, show support on the 20, and then work itself back up. That's what a true correction and reversal would look like. So currently, we are not there. We have quite a bit to go, as in, it could happen fairly quickly in the next few days. However, there's just so much downside momentum still. We cannot just rule out that the downside is done. Now, if everything is holding where it's at now, then we would see a retest in this 12,100 range. First, we have to break through this 11,860 range. But this is currently where we sit. We're still in momentum. Typically, when you cross this momentum phase, you get a rollover into a continuation. So what does that mean? It means it temporarily slows down, does one of these moves, and then continues on. So that's why, people like to think that markets just move in one direction. Oh, you're just, straight on. And yes, if you go back far enough, the market's done nothing but go up. However, when we're talking short term, and whether you're a day trader, a swing trader, you could very easily be short biased and lose your whole position on something like futures where it pulls back 1,000 points, right? Just because you were right in the long term of it probably has still more downside, you have to account for these corrections. These corrections are still very big moves. So, with that being said, as we get into the momentum state, which we are in on the weekly chart, we might see a little bit of a correction and then a continuation. So that's why we're watching so very carefully right now. The Nasdaq, the S&P, the Dow, they're all in the same scenario, doing the same things. I will go over individual stocks if you guys want. You have to comment those below though, because other than that, as long as we're following the indices, we're going to have a very good idea of what direction the stocks are moving as well, because they're all kind of tied together. So unless you have something very, very specific that's just doing, who knows what, I can run scanners and find stuff that's moving short or long. And, I have a strategy with all that, which we can do that on another day. But for the most part, we're just following the indices, futures, and currency pairs, Forex, right? So with that, we have Euro USD, which has been very closely following these um, same market trends. It broke out of it a little bit, but it seems to be pretty much on the same page now, where we have the same kind of bumpy road to resistance in this channel. And we're looking to see if it's going to roll over and come back down through it, right? So this is a very sketchy position. If you're taking longs, you have to understand that there is a lot of resistance right here. If you're running short, you only have till about, this range, and then it could bounce off of it and go back long. So you really have to take these positions few and far between, wait, be patient. Patience is the mind game, right? That messes a lot of traders up. And that's where we have to be right now. If you go to GJ, guys, so I brought up all the pairs against the Japanese yen, and they freaking crushed it yesterday or today, where they ran up almost 200 pips, most all of them, 100 plus pips to 200 pips. Euro JPY. You guys remember, I'll go to the 4-hour chart because this is where we were at. Basically, I was given that kind of, we're going to double top when we were consolidating here. So if you take this mark up to where we made it today, 200 pips in the matter of about 24 hours. Remember, Monday was a holiday, so basically just moved sideways. All the big move happened today, and not to say it might not continue, but what happens is you get so far out of your comfort zone that you gotta hold back on those positions. However, right here, that was massive, right? If you could catch 200 pips in a day, you really only need to catch one of those a week, right? So, we got to play the game of, in the mental game, are we day traders trying to snipe 10 pips or 10 points for that matter on the futures? Are we trying to snipe and just get these little bits here and there? But what happens when that little bit is wrong, right? If you don't have a quick enough stop or some kind of bracket that helps regulate that, then you get yourself caught in a very bad position very quickly. If we get these bigger scaled confirmations, then you can kind of take a breath. You're going to go up and down. You're not going to be green from the start, or you might be green from the start and then it quickly pull you back down to red. It's going to have some back and forth and ups and downs. But when you get that big time frame confirmation, 4-hour chart, 1-hour chart, daily chart, you can be confident that most of your move is going to happen. Now, at that point, it's just like, how confident, right? So although I wanted to personally see this double top at 144.24, I was cautious around the bottom of this, right? So if we kind of get in right here, I draw that you can't see this line all the way through. I can make it extend. I draw the bottom of that, right? So I wanted to get to the top, but I'm cautious here. And if you go into today, it ran up strong inside of that and stalled out, right? So that's where me personally, I exited my position somewhere in this range right here today after holding it from here all the way up. All right, so some things to consider when you're running these moves back up. So GJ, same thing. USD JPY, it was the same thing. You're seeing them pull back a little bit currently. No surprise there. When you run up 200 pips, getting some pullback and you know entering a consolidation phase, and then you got to watch out for correction versus reversal, right? So these things are very strong against JPY, but because of the risk of any market, take the profit off the table and get comfortable with that, right? There's no FOMO in this game. You win, you go green, you're happy, you take the profit, you get out of it. And wait for a new setup. New setups will happen, right? Now, if you're like me, you can scan all of these very quickly and see if something catches your eye. What would I be looking for? I would be looking for something that has that's similar to this, right? Where we have nice crossovers, tight patterns, and if we're building momentum. Now, I wouldn't take this trade because we are still very low and we have no idea where this is going to go. So we had this large range of consolidation correction that I drew out. This is the 1 hour chart now. So if I was just looking here, I would just tighten it up to the most recent channel, which is more or less this top. Somewhere in this bottom, you see how I just kind of hit the 50. So that's why I'm more or less going right here. Back to basically this same top. So that's 2 points. That's where I like. You got another point right here. That's this line. You have this point, this point. So as long as we have multiple points on each line, we know it's a pretty solid consolidation channel. And now we have to wait and see. Like the patience has to be there. My guess, because this is Euro USD, by the time we're waking up, 6 a.m., 7 a.m., check this for a breakout in one of these directions. If it breaks out below this channel, right, I'm going to look for levels back at this support. If it breaks out above, I like to do kind of like these original kind of crossovers with the 50 and the 150. I'd be looking for something like that. And you can see that I just picked these spots, but they're almost identical ranges because that's how markets move. And you'll see that the more you do this. So if I went up from here to this line, it's roughly 95 pips. If I went down from this line back to support, it is almost to a T, 95 pips. I bet you this range is almost 95 pips. Look at that, 90 right there. So these ranges are very big, right? So if you're caught in the wrong position, like if I bought long right here without the rest of my confirmation, then I would be eating, 50 points, 55 points or pips right there to the downside. Like nobody, like you don't want to sit through that, right? That's too much. So you have to have these confirmations so you don't get caught in these big range channels of just getting eaten alive, right? So be patient, wait for your move. I'll be watching Euro USD personally to see if we can get a breakout in one of these directions, and then of course accordingly. So this is where you get a mixed signal too. So this is where we go into a little bit more of the teaching and side of this. You have with the 50 crossing the 150, this would be indication of going long, right? Hands down, it's consolidating, things are long, looking good. When you go to confirm with your scale, this is why you always have to confirm. You cannot confirm that long position with the daily chart right now. You just can't. You go to the 4 hour, right? You cannot confirm this move. Like there's nothing here that says, yes, we're going long or short. Like it just doesn't give you enough information based on what we see with our indicators. We're running an ADXR, which means when it's going up, it's increased momentum in that direction. Well, we had increased momentum in this direction. So right now, this is technically a consolidation correction move, right? It would be consolidation as we cross over here. It would be a correction move as it increases here, but there's no continuation on the correction, right? If it broke out above this, we went from consolidation, correction, continuation, right? If it rejects here, then we enter back into this consolidation phase because that's where it was. And now where's it going to go from there? Is it going to hold the bottom and bounce back up? Or is it going to fall through the bottom and have a continuation to the downside? Because that's where the momentum is currently, right? So we have to understand that momentum, although has phased out, it's still favoring the downside. And all of these indicators still favor the downside. So when we're in here and we're looking at this, for me to definitively say, oh, we're going long, I just can't. I would be wrong probably 75% of the time because all my indicators are still short, right? I'd get eaten alive. I would like to think that a lot of traders are very optimistic. They're very bullish for the most part when they're trading something. But to fully understand, you have to understand both sides of short and long, especially in currencies and futures, because they flip a lot throughout the day because they're constantly in battle with whoever, right? Whoever's running banks and, whoever else are the big money players pushing things around. And we as the retail traders have to acknowledge that we have to wait for a very specific confirmation to be in favor of that. So that's some mindset work for you guys tonight. If you want to see, it's the same thing, right? I would love to say, oh, let me short this, right? This is where a lot of people go. Let me short this right now. Well, yeah, it's stretched out. It had a huge move. It would easily be able to go, yeah, I'm going to short this, right? It just looks like you could short it, just like you saw this hump over here. You feel like you could short it for a big run here. But if all your indicators are telling you that the move is long, don't short it. Instead, be patient, wait for a new setup for either a long continuation or a true reversal, which is not apparent. No matter how crazy overextended this looks, with all this being above 80 and this being above 0 and this being extended up here on the MACD, do not get caught doing things like this, because when 9 o'clock rolls around and there's a new 4-hour candle and this one stayed right here for 4 hours, there is nothing stopping this from running another 100 pips against you. Nothing. It's fully a long scale setup, and there's nothing stopping that from happening. So try to be very aware of being a short bias when all the indicators are long and being long bias when all the indicators are short, right? That means you're trying to catch a top or catch a bottom instead of waiting for a setup to play the actual trend. So going in again, so to kind of recap, going into tomorrow, we're actually in a sit and wait position. These run all night long. So by morning, you'll have your answer. We're waiting to see if this comes up here. Now, there's two levels to this. If this breaks above this top of this range, then I'm looking for it to go to the 150, right? I'm constantly looking for where's the next resistance, because we're still short oriented, right? But there's enough move and confirmation that you can run the long, but you have to be very aware that it could snap back and fail at any given resistance point. So make sure you scale out. I use, my 180 or whatnot, but you can see here that if you look at these ranges right here, this big consolidation that happened, back here, you see that? So anything that's in gray is where that consolidation happened, which means at any of those levels, it could decide that that's the level it's going to kind of just reject you at, right? So if that's the case, I want to remove this. So if this is the case here, right, and we see this, we know that if we got above this, we're probably pretty clear for a nice, decent run or, a corrective move of, like I was saying before, like 12,000, 5 or 12,250, anything in this range, right? Anything in here is going to be very like, I might be able to play to the top, of this consolidation range, but I have to be extremely cautious because it's only going to take one of them to just snap it back and then run it back down. So right now, this is a high risk area to play in, right? If you were strictly playing consolidation, it'd be easy to say you're going to short it back down to the bottom of the consolidation channel, right? That's a solid mindset to have. I don't like to play that. I feel something can consolidate for a day, 2 days, 3 days. You don't know when that consolidation is going to decide that it's done consolidating. So it's going to take for you right now is to go, well, I'm going to short it at the top of this range because I'm going to catch a big move down. Well, what if it never comes off of this 50 and it plays this move, right? What if? If you're not paying attention, you're going to lose an account that way. So you can't just assume that this range is going to be this range forever. That's why we have to wait for our move, right? And you can scale down. And when you scale down, you see that you're kind of hiding underneath here, right? This is favoring, it's teetering that short to long, right? Indicators are long. Your signals are starting to go short. There's no move here. There's absolutely nothing to play until you get something that confirms long or short, right? So how did I just draw this support and resistance? On the first breakdown that it rejected, that's my support. And then in that correction, where did it reject? That's my resistance. So in this 5-minute channel right now, this is my support and resistance. And until I see something happen outside of this range, if I was going long, I could play it back to where it topped out, right? That would be my goal. If it confirmed long, it's 80 points right there. If it confirmed short, then we can play the gap. Now, a lot of people have heard of these channels where it's so filled with the buys and the sells and everything like that, right? That when they break out, you get this big break, and then as soon as you get a pullback, and it bounces off of it. So there's a way you can play these to keep yourself safe, and that is you draw where the breakout happened and to where it pulled back, and you draw that across. And in theory, this would mean anything above it is long and anything below the box is short. So you actually don't play the box, okay? So I can't just say, oh, I'm at the top of the box and we're technically long. I still want to wait to confirm though. Like I still need to know that this isn't going to fall through. And that's where these momentum indicators come into play. The momentum indicators are showing you which direction is capturing the momentum, right? So as we see right now, technically the short side is increasing this momentum. But because we're kind of stuck between the 15 and the 30, there's not enough momentum to be overwhelmingly in favor of one side, right? It's still channeled. And you could see, right, it's been channeled since basically back here, all the way up to here. So when we get here, would be in the box, which is a high risk place to play. So if it started showing favoritism here, I actually would need to wait to see it continue below the box. If we start seeing the favoritism above this, right, consolidation channel, then we know we're clear to at least try and double top what we did previously. It's a lot of information, guys. This is what we literally do. People who are chart technicians, we do this day in, day out. I personally have been doing this for 6 years now. There's so many strategies you can use that you can literally just overthink everything. So that's why I'm trying to give you more of a like a rundown basis of what is possible rather than giving you your own strategy. The reason why is because if you tried to implement someone's exact strategy, then you're going to probably find yourself just missing a piece of the puzzle, right? But when you take what you've learned and you take these indicators and you can match it up to something that you understand and it starts making sense and you back test it and you try it, then you will have the tools to be, the trader you want to be, right? So I can go through and I can teach how these things work and what they look like and how to put them on your chart. It's up to you to understand it and know what move is happening based on what you see, right? There's a lot of uh, people who put indicators on their charts, but then they go in and they're only watching one thing: price action. They cannot take their eyes off the candlesticks. If you can't take your eyes off the candlesticks, you need to learn candlestick patterns. You need to learn chart setups or, chart patterns with the indicators. If you're using actual indicators, then take your eyes off of the price action because you need to understand that you have a specific entry and an exit based off the indicators, right? So if you watch the individual candlesticks, one sharp candlestick in the opposite direction might scare you out of your position, but the indicator never wavered, like it stayed in the pattern that you wanted it to, right? So like something that might be like this, you're like, oh man, I caught this perfect breakout, and then you get this one big red candle and it scared you out of your position, but you didn't have a technical crossover yet, which might happen here, which means you technically could have gotten a little more here. And then if you scaled out to a bigger chart to confirm what you're looking at, and you say, wow, I sold right in here, but if I would have looked at the 30-minute chart, this was still in a very good moving position. So I didn't have to get out there, right? And you might have missed out on 100 extra points or 50 extra pips, or depending on what you're looking at. So you have to always scale out to understand what your position is that you're entering in the first place, right? So if I was entering on a 1 minute, then maybe I scaled out to this 30-minute to confirm that it was green, green, green here, moving up. My 1 minute confirmed, I'm going to take it. And then when my 1 minute is failing, I go back to this chart and I go, well, this is just getting started, right? Because it's on a larger scale. So even though that 1 minute's pulling back, I still have more run coming because my larger scale is telling me I still have room to run, right? So these are the things that, if you're just in here sniping, then none of it even matters, If you're just like, oh, green candle, I'm going long. Red candle, I'm going short. Green candle, I'm going long. If you're doing this, none of this even matters, right? Because you're going to have your 2 second snipe, and you're going to be either red or green at the end of that, and you're going to just keep doing it, and you're going to trade 50, 60 times a day, and that's just your strategy, and there's nothing wrong with that. But if you want to understand how momentum works, if you want to understand how trends work and how to catch bigger moves that give you confidence to sit back and relax, then this is the type of stuff that will get you there. All right, guys, Will Beach, June 21st. Like, subscribe, share this. We're growing this community. We're going to grow it big. I'm giving, I do all this right now. This is, uh, there's nothing else involved here besides me offering my information to you guys. So please do me the favor and just hit the like button, share it with your friends. Um, this is a good place to start if you've never watched charts before or understand how the markets are moving. And I look forward to seeing you guys on the next one tomorrow. We're doing it every day during the week, so that's what you can look forward to. Sometimes Fridays it'll be posted on either Saturday or Sunday, but you'll get 5 updates throughout the week. Thanks, guys, and I'll catch you on the next one.